Good morning. It's March 5th, 2026. Welcome to your daily intelligence briefing. Let's get straight to it. Here's the operational roadmap for today. We'll start with why the markets are feeling the pressure. Then we'll cover key updates from the macro and governance fronts. And after that, intelligence from the corporate sector. We'll wrap with an analysis of fiscal federalism and the closing market data. Let's begin. All right, let's get right to our lead story. Geopolitical tensions boiling over in West Asia are sending some serious shockwaves through India's markets. We're seeing the rupee hit a new record low and equities take a sharp dive. So let's unpack what these numbers really mean. The numbers here tell a pretty stark story. The rupee has fallen to a new low of 92.3 against the US dollar. So what's the real-world impact? Well, if you're an importer, your costs just shot up, creating a whole lot of uncertainty for your business. At the very same time, the stock market took a significant hit, dropping by about 1.5%. Now, a fall like that, it makes investors very nervous and much less willing to take on risk.
And to put all of this into perspective, since this conflict flared up, an estimated 16.6 lakh crore rupees in investor wealth has been wiped out. That is a massive, massive figure.
And look, we're seeing this confirmed across multiple credible sources. While the exact figures have slight variations, the Financial Express is reporting 92.15, while the Hindustan Times has it at 92.3, the story is exactly the same. The rupee is at a severe, record-breaking low. This climate of uncertainty is, of course, hitting commodities too. All these worries about supply chains have pushed oil prices higher, with both U.S. and Brent crude ticking up. And back home, we're also seeing a slight cooling in the services sector. The PMI dipped a bit to 58.1. These are tangible impacts, not just headlines. Okay, let's zoom out now and look at the bigger picture, macroeconomics and governance. We have 5 key developments to cover for you here. First up, there's some positive news for the government's finances. Thanks to a really strong jump in corporate tax collection, almost 15%, the center is now in a great position to meet its fiscal targets for the year. Next, a major new initiative is taking shape in the agricultural sector. The goal here is to give a big boost to 100 districts that have been underperforming. So how are they going to do it? By merging 36 separate government schemes into one focused effort. And they're backing it with 24,000 crore rupees every year for the next 6 years. The whole idea is to get more bang for the buck by working smarter. Third, let's talk about agro-infrastructure. Since 2020, the Agriculture Infrastructure Fund has channeled over 83,000 crore rupees into projects. And as you can see from the data, 2 states, Punjab and Uttar Pradesh, are way ahead of everyone else when it comes to getting these projects approved. Fourth, a quick political update out of Maharashtra. With the Rajya Sabha elections coming up, the battle lines are being drawn. The Maha Vikas Aghadi coalition has officially thrown its support behind Sharad Pawar. And this is all happening fast. Today is the nomination deadline, and the polls are on March 16th. And finally, on the state finance front, the center has just approved a 360 crore rupee assistance package for Kerala. That's a pretty significant injection of funds for the state.
All right, let's shift gears now to the corporate world. We're tracking some important developments in IT, real estate, power, and international trade.
When it comes to artificial intelligence, India's big IT companies are all on very different starting blocks. Just look at the latest numbers. Infosys and HCL Tech are reporting AI revenues in the millions. But then you look at TCS. They're already at a $1.8 billion run rate. It just goes to show how varied the AI adoption curve is right now. Even as the industry body NASSCOM predicts AI will soon make up 3 to 4% of the entire sector's revenue. Okay, next up, a big shift is coming for the real estate sector. The RBI is tightening the rules on how projects get financed. To put it simply, this means lenders are going to have a lot less flexibility, which will probably make it harder to get funding. This is really a move towards stricter financial discipline, one that's likely to make both developers and banks a bit more cautious. Now, in the power sector, we've actually got some good news on the pricing front. The average price on the main day-ahead market has dropped 14% over the last year, coming in at 3.85 rupees per unit. This dip in wholesale electricity prices is definitely a positive sign for consumers, both industrial and retail. And this all brings us right back to the impact of that weak rupee. Importers are really caught in a tough spot. You could even say they're in limbo. With the currency being so volatile, it is incredibly difficult for them to price their goods or to protect themselves from future currency swings. It's a huge operational headache for anyone who depends on international trade.
Now, let's turn to our editorial digest. Analyst Avani Kapoor has published a really thought-provoking piece on a very complex subject, the financial relationship between the central government and the states.
Her entire argument can be summed up by the title of her column, Fiscal Federalism Enters an Uncharted Phase. What she's basically saying is that the old rulebook for how money flows between the center and the states is being rewritten as we speak.
Her core thesis is this. While there's a lot of talk about decentralization, giving states more power, the reality on the ground might be the opposite. New frameworks for revenues and responsibilities are actually constraining the financial autonomy of states. And this, she argues, is creating new points of stress in the system.
And that leads to her most crucial point. The legacy assumptions about who funds what and with how much discretion are now under serious pressure. It really forces us to ask some fundamental questions about the future of state funding and autonomy.
And now, let's close out with the verified market snapshot from March 5th.
So to quickly recap the key numbers, the rupee closed at that record low of 92.3 to the dollar. Stocks fell by about 1.5% across the board. Oil prices edged up, with Brent crude finishing over $82 a barrel. And finally, the India Services PMI eased slightly to 58.1. That concludes today's briefing. Thank you for your time.